Late night fix with Short to Fix. How you guys doing? That was today probably one of, if not the craziest days that I've ever seen in the stock market. We had a hot CPI print and we had jobless claims a little bit higher than expected. Now, what did we say yesterday in the live stream was going to happen if we had hot CPI and honestly lower than expected jobless claims is what we were talking about, but even hot CPI could have done it. We said, I'll take all 350. It was where we were going to go. So we were spot on that one. The crack down below 350. And then we saw, I believe, 347, 348. Let me look right here really quickly. See what we got today. 348.12 was the low of today. So 348. We rallied all the way up back to what was the close? Oh, it's not telling me. 365.97. Almost a $20, 20-point move. Nasty, dude. But here's the deal. The interesting part about this is nobody really realizes this. Everybody's like, bank earnings tomorrow. That's all. That's all we have. No. There's the sleeper catalyst that we got to talk about that I was talking about in the video today. So we're going to go over all that. We'll go into some charts. We'll go into some trading strategy again, team. Today was a day that I don't think a lot of us have seen before. And it was pretty wild. So again, this is a public live stream here. So make sure you guys engage, hit that like button over here. And hopefully we're having a good evening over here, team. Oh my Lord, made 112% on puts, cashed out with 5 minutes, reversed into calls. My man, there you go. That daily candle is silly looking. Dude, it looks drunk. But yeah, again, make sure you guys hit that like button. Costs you nothing to do. It helps me out a whole lot over here. But yeah, man, I mean, there's a lot of nonsense going on tomorrow, and it all has to do with England. So you have the pound, you potentially have nonsense going on with Japan. Again, once this whole English the situation in England gets resolved, then you start focusing back in on like the US, the dollar, and then Japan with all their nonsense with like yield curve control and all this crap that they're doing. The other thing that we also have to talk about here is the fact that a lot of these people on the internet like to have opinions and thoughts about things, but most of them are really stupid. 5-figure gain today. Didn't see that coming. DM Ohio. Awesome. Finland too. Yes. Finland as well. I could take a look at that. But most people are dumb. Here's why. What did we see in terms of CPI, unemployment data, literally every single economic indicator leading up over the last 2 months? It's not looking good. We're nowhere where we need to be. So then when one piece of data comes out and everybody starts screaming for a Fed pivot, what? Really? Even the probabilities are telling you that they're not going to pivot. So at the current time, oh my God. All right, we'll look at this really quickly and then I'll share the screen. We'll go over some charts and stuff. Hold on. Oh, it flipped back. So there's a 96.3% probability of a 75 basis point rate hike in November. It actually flipped. So that extra percentage, the 100 minus the 96.3, used to be on the 100 basis point side. Now it's flipped back over, pricing in slightly 50. Not really. It's 3.7%. We're getting a 75 basis point rate hike. If the Fed doesn't, well, then they've kind of screwed themselves. The other thing that I want to talk about with everybody, imagine watching this scammer. White, imagine not making money in the market, pal. I love it. I love the idiots that come into my live chat sometimes. Like, people are just so, like, I could tell you all the time. It's like, give you everything and you're still going to sit there with your thumb in your ass, listening to people on Twitter being like, oh yeah, this is, nope. Listen to the people that actually know what they're talking about or lose money. Pick one. And I know which one you picked so far. But here's the other thing that people aren't really looking for. And they've started to look at it today, but we've talked about this in the past, and it's rents and home prices. So here's the deal with rents and home prices. So we know that when the Fed raises interest rates, home prices are going to come down. Mortgage rates go up. People that could previously qualify for a home that cost $500,000, they no longer can qualify. So the demand gets taken out of the market and prices go down. But what do they do instead? They still need somewhere to live. So they go to the rental market. When they go in and rent, you see an influx of people who don't want to buy a home right now. And then they jack up rents. Now, I did see something today that said you've seen a lot of the rent cycle kind of conclude and you're seeing all of those new rents come in. But the problem is that rents lag because you're on a longer term lease. It's not like you're on a month to month lease. It's like a year, 2 years. So when all these leases come up, new rents get issued. So you see that rental inflation lag. Now, here's the problem. You have energy prices skyrocketing, or they've been skyrocketing and they're still relatively high. Then you also have the Fed raising rates to try to tame inflation, but by them raising rates, decreasing home prices, which are going to come down, they raise rents, which then increases inflation like CPI even more. So that's where this soft landing is so difficult. What do you think about 920? Been scalping with them pretty good. Oh, those are good. Those are interesting. They're good. It's just a little quick. You're gonna get faked out a lot more with 920 than with 1348. But 920 is good too. You have to play it very, very tight. But let's kind of get into some of the charts here, people. Get everything that we need to know going into tomorrow. And again, there is a no nonsense policy over here. If you act like a fucking idiot in my chat, you're gonna get treated as such. If you make logical comments and you provide actual analysis on your side of the argument, perfect. I'm here for that. But if you're going to be an idiot, I'm going to treat you like the child that you are. Fair? Cool. All right, here we go, team. Wouldn't there be more single family homes and apartment built to take advantage of higher rents? If not, then home prices won't drop because of low stock. Well, you would increase stock. Technically, you can build them, but there's no guarantee that somebody's going to get rented. Like like somebody could buy it. So we get to use the wrenches again. You can 100% use the wrenches. The new MACD settings help me stay in the play longer for a 14% gain. If I use the old one, we'll only been a 4% gain. There you go, man. That is awesome. All right, so looking at the SPY here, here's what we have to look at going into tomorrow too. So again, I don't really have a bias going into tomorrow. I'll tell you guys the position that I have. I have a weird janky strangle. I have puts for next Friday and calls for Monday. That's what I have right now. So I'm attempting to make the calls free. They're up a lot right now. The puts are slightly down. The strangle's slightly red, but it's in terms of percentages, it's negligible. So here's what we have going into tomorrow that you guys really, really, really need to be aware of. One, bank earnings. So when all these banks are going to be reporting their earnings tomorrow morning, you're going to be getting economic outlooks, how the banks have actually performed, and how they expect things to go in the future. That's big. That is market moving information from some of the largest financial institutions out there. That's big market moving info. There's going to be a lot of information and data that's going to come out from those reports, and the market is going to react. But that's mainly US based. So you have bank earnings, cool. You get retail sales data. You get Michigan consumer sentiment, all that nonsense too. You get all that nonsense. The wild card is England. So I want to take you guys through a little bit of like a series of events, and we've talked about this. We had let's see. So heard your voice today, taking your last scalp trade at the end of the day. Got your 13% and got the hell out a minute before it flew back up. Good, man. It's all about locking in gains. There's no reason to try and be a hero, man. And again, guys, make sure you guys hit that like on the stream too. We got some slackers over here. But so here's the series of events and why this is so important. So we saw Liz Truss, however she wants to pronounce her name, came out and essentially said that they wanted to do this new budget plan. And part of that plan was to cut taxes. The market reacted to that very negatively. The pound tanked, yields on the gilts skyrocketed, and the pension funds got mollywopped. They got killed. Margin calls left and right. They were having issues. So then the Bank of England said, we can't have this. So we're going to go out and do a short-term quantitative easing spree, buying those bonds to provide somewhat of a backstop. What happened then? So looking at these 30-year gilts right now, what happened? Okay, so you saw these yields skyrocket. Then you saw Bank of England step in, tank the yields back down. This is 3 days, and then they rallied back up to almost the highs, and then the Bank of England stepped back up again and started buying the bonds up. Hi, SV, the new guy. What's up, buddy? So then we had statements from Bailey. That was around here, where he said, bond buying ends Friday. Pension funds, you have 3 days. Yields start going back up. This could be the funds continuing to try to liquidate their positions, and then you see this tank back down. But then you have this. This is important here. UK's trust, whatever, thinking of new tax policy U-turn. Prime Minister Liz is considering reversing more of her government's controversial mini budget, some media reported on Thursday, setting off a rally for the battered pound in British government bonds. Discussions were underway in Downing Street over whether to scrap elements of the plan, which caused turmoil in financial markets the moment it was announced by the finance minister 3 weeks ago. The Sun paper said that she was considering allowing a rise in corporation tax to take place next April, something she promised to halt in her bid to be prime minister, in which she vowed to sweep away the orthodoxy of economic policy. Our position hasn't changed. I will come up with a medium-term fiscal plan on the 31st of October, as I said earlier this week, and there will be more detail then, he said on the sidelines of International Monetary Fund meetings. The problem is that they need almost, it's not like a bargaining chip. It sort of is a bargaining chip with markets. Where if they stop this bond purchasing, there's nobody to come in and stop this. This is not going to, nobody's going to stop this. When it comes up to this level next, the UK or the Bank of England is not here to just buy these bonds and send it lower. So then what happens? The pound tanks, the dollar rips, the bonds go fucking crazy, pension funds blow up, and the market goes, Here's the wild card. If they stop bond purchases and announce those tax hikes, then the markets can rally. Because at least they're then doing something. It's possible. So tomorrow, or Monday or Tuesday, next week, over the weekend, at some point, probably within the next 2 weeks, we're going to get somewhat of an announcement. I would say that at the earliest, it happens overnight tonight. At the latest, it happens Monday morning. And this is where it gets interesting, because what are they going to do? They've screwed themselves. They've completely and utterly screwed themselves. They've let these situations get too out of hand, and now they have to deal with it. Or the whole country gets destroyed by mega radioactive tsunami. I mean, unlikely, but possible, I guess. You could see that. But those are the types of things that I'm looking at going into tomorrow. I have my weird strangle that I'm looking for. Futures are not moving, I don't think. Let me take a look here and see if they're doing anything. I don't think anything's going on here. Yeah, nothing. Futures are flat. Nobody knows what to do with this move today. I was thinking through this today, and I was like, okay, this could be a liquidation or a margin call, but it didn't make sense, because if you were getting liquidated on a long position as the market's coming down, that means that there would be more selling pressure coming in. Okay, then what's the other outcome? If you get liquidated on a short position, then you would have to buy and send the markets higher, but you're so fucking green on your short position that why would you do that? The only thing that I could kind of see was maybe an overreaction on the CPI news, but you still ripped really hard. So this could have just been a weird squeeze as you came up here. Or you look at this on the daily and the 4 hour, and you see where it's come from since 432, this little peak. And if you were shorting above 4,000 or 400 on the SPY, I mean, you're so green on these shorts that you keep seeing this bottom, bottom. The sellers are not stepping up to short at these low levels that they just decided to say, fuck it. We'll wait till it comes back up higher. We'll get out of our position and then reposition and hit it on the way down. This is good stuff. Thank you. No problem, man. This is stuff that we go over every single day, man. Having context is good. It can give you a little bit of bias. But again, today, if you look at the chart's going to tell you where things are going to go. Like I got stopped out at one point pretty nastily on one of these SPY trades today before I flipped long. Because my bias was like nothing, like the UK's stopping their bond purchases. There's all this nonsense over in England. You had a hot CPI print. You have bank earnings tomorrow. You have market making new lows. And I was like, I thought it was going to come up, reject, and come back down. So I was up one, or down a big one. And then I murdered some nice trades over there. How do you know which levels are important on SPY? Keep adding more levels, not sure which to remove. So here's what I do, Gregory, and this is something that you guys should take note of. What I do is, so once a week, I'll usually do this, and I'll add some more levels. But what I'll do is I'll look at the daily and the 4 hour, and what I'll do is I'll map out levels like this. So I'll go here, and I'll map out the big daily levels. So what I would do is I would add one down here at the lows. I'd have probably one up here. I'd have some nonsense down here, and then I'd flip to the 4 hour, and I'd be like, okay, and I'd color code these. So you guys see that on my Webull charts every day in the streams in the morning with all you guys in there fucking printing. But then I'll go with the 4 hour. I'll mark out these levels here, and then what I'll do is look at the past 3 or 4 days on the 5-minute time frame and look for big pivot points. I don't want my charts to be too crowded because then if I see price, if the levels are too close to each other, it's going to mess with my head and be like, okay, well, I don't want to be staring at these levels and be like, all right, well, it just hit this level, came down to this one. It easily could slip down below this, but that may not be as key of a level. Yes, Ryan, he did. Luke, welcome. You could also join us in the Discord. Link in the description. Yes, sir. I can throw that link for you guys in here too. We have some crazy things coming for you guys. Again, we are the most profitable and the best place to come and learn how to trade team. If you guys really want to take your trading to the next level and start taking your trading seriously, you guys know where to come. But over the next few weeks, we have some crazy stuff for you guys. So make sure you guys get in there before then so you can learn the strategy and make sure that you're fully able to take advantage of some of this stuff because it's crazy. It's pretty wild. Markets will continue to be crazy till midterms. Then bottom falls out lower than pandemic lows. Disagree. I think that there's a level that's going to be seriously defended. I think we slip below it and then we start rallying. The level is this. 339. If you guys follow me on Twitter, as soon as we slipped 350 today, I tweeted out, I was like, the COVID high is now in play. This 338 to 340 little level here was in play today. If you saw like continued selling follow through, we easily could have tapped it. This level, though, I think is going to be heavily defended. If we break it, I think you could see 320, 315, and then that's kind of going to be where we bottom out. But it depends. It depends where we are in the cycle. If that slip happens in Q2 of next year or even Q1 when we start to see things starting to get better, then you can say, okay, maybe start to buy more. But until then, it's so risky. There is going to be so much volatility in this market, team. You got to know how to navigate it. Below that 322. Where is it? This one? Yeah, 324 right around here. But those are really the main things that we have to look at going into tomorrow because it's going to be bank earnings. Earnings season starts too. Earnings season starting. So you're going to get a lot of volatile moves. Again, we don't necessarily know if the cost of production is getting eaten up by the companies or getting passed to the consumers yet. This earnings season is going to give us a really good indication of where those costs are going. You have 320 puts for November 18th. Do I think it's a safe play? I mean, I can't. I mean, the chart in general is still saying it's coming down. This is a daily rim right here. So it's safety is a weird word to use with a trade. It's all risky. Like it's always going to have risk. Could that position go to zero? Yeah, but it's all about having a proper stop loss and a replicatable trading strategy that's going to that is profitable. That's why 1348 works so well. It's the most profitable EMA crossover strategy. Adding the rules, the system, the algorithms, the alert systems, the predictive algorithms to it make it 10 times more powerful. Dixie showing some strength after hours. Let's see what happens with England. 530% on a SPY call. 1348 never fails. Murder Gang. There we go, buddy. Daily bullish engulfing candle printed today. Technically, but this candle is fucking stupid. Look, it opens fucking down here, and then it just rips. No one will judge you for high-fiving that like button in public. Tabasco Dave, appreciate that, buddy. But again, this is not the time to try and be a hero. It's really the time to try and protect yourself from all of this crazy nonsense. Can't really believe we ended green after that pre-market. I know. How is the VIX not moving? That's another thing. Remember this morning on the live stream, everybody, when I was like, oh, what's the VIX at right now? And I look at it and it was down when the SPY did the shitter. And I was like, wait. Am I on the wrong thing? I was like, did I click the wrong VIX? And I searched through all of them and I was like, they're all not doing anything. So the volatility indexes didn't really react. It could be because the IV was already there. The implied volatility on the put side of the S&P option chain was already juiced. Ticker symbol total. Probably shit, dude. This thing's just dying. I've never seen this. You told me that I showed you this, and I don't remember this. That's the first time I've ever looked at that thing. Does this mean we can finally short the VIX? No, Mr. Arvin. Because most likely you still have more upside on the VIX. It hasn't. The market, in my opinion, it hasn't bottomed yet. Like even when we were trading at like 400, 430, if you guys listen to anything that I was saying, I was like, it has not bottomed. There's no reason for it to have bottomed yet. Nothing is better. The Band-Aid has not gotten ripped off, and you still need to see things play out. So here's what Powell is looking at right now. Jobs data. He's looking at wages. He's looking at rents. He's looking at home prices and overall inflation data, energy, and how these rate hikes are actually affecting things. Right now, there's really not much of an effect besides companies feeling the struggle. Your VIX and VXX calls got slammed. Okay, I'm going to tell you guys something right now. VXX is broken. Even if they say it's not broken, I will never touch that thing ever again. Even when it wasn't broken, it was broken. I've seen VXX do weird shit. I've seen the market come down or the market rip, and I will see VXX actually come down, and my options on it went down. Like VXX went down like 7% one day, and my puts went down. And I was like, this, no more. None of this ever again. Because it's just, it moves weird. If I'm going to do anything, it'll be UVXY. For whatever it is, Barclays fucked up VXX, and it just doesn't work. After taking profits on the morning stream today was a good example of taking quick scalps. Dude, we killed it. I didn't really do much on the morning stream. I had the quick 5-6%er, and then that was it. I didn't like the way the market looked this morning. I just wanted to sit it out. I was like, this doesn't make much sense. It just didn't. Like, I didn't like the way the market was moving. I didn't think it was going to drop much lower than it did. And we were saying that too. I was like, I don't think this thing's going to finish under 350. I didn't think it was going to rip to 367. Or 365. I didn't think it was going to get there. It did. But again, if you look at the chart right here, this is just a perfect illustration of 1348 right here. This is most likely a nice little Invictus right here coming up. You could have played this up to the 200 EMA, but even if you saw this cross, closing candle above the 200, this is 357 all the way up to what? 360. If you're playing this conservatively, even on this flash candle you're out, you get this one coming up here and it just rims the entire rest of the day all the way up to 366. That's a what? Even if you FOMO in late on this candle, 359 to, let's say it's here on this rim, this breakdown, to 364.89. That's a what? $5-6 move? I mean, this is just illustrated right here, team. And these happen every single day, dude. Was the CPI data bad today? It was worse than expected. It was worse than expected. The expectations were 8.1, came out at 8.2. Never again. Yeah, VXX is a wild boy, man. VXX is a wild boy. But let's see. And then the 10-year was fucking around a little bit today. When the CPI news came out, the 10-year yields ripped. Dixie ripped. 2-year ripped. 30-year ripped. All the bond yields made highs. So if you look at it on, let's honestly look at this on the weekly. Let's see if it'll show. You go here. When was the last time we were at these levels? 2010. And remember what we've been talking about with Tina and Ba. It's very possible again that the whole way that people invest right now is going to change. It's just going to change. You took quick scalps on a smaller size, didn't trust any calls today. My first trade was small size. I didn't like it. I didn't like the whole way the market was moving. It didn't make sense to me. I just didn't like it. But that was like the first 30 minutes of the day. I was like, this is not for me. So I just kind of let the algos do their thing and then made some trades later. Got my weird strangle and see how it goes. I think tomorrow is going to be fucking crazy. Change how? Everybody's always in this buy the dip mentality because they think that stocks will always come back. They may not. Because there's alternatives for that money to go that there weren't before. You can go to the bond market. You can go to the real estate market. You can go to these other markets where you can get a higher yield with less risk. Like, think about it like this. Let's say, for example, that we're going to look at risk in terms of a percentage. This isn't actually what it is, and it doesn't imply anything about actual stock fluctuations. This is just going to be a scale. Actually, let's do a scale between 1 and 10. How about this? And then we'll do an expected return. So let's say for a bond portfolio, you're going to get, let's say, 4% a year. And why don't they ban algorithms? You're going to tell people not to use technology? I mean, that's why we've created our algorithms, and that's why they work so well. Retail investors have access to algorithms. Let's see. Jordan, you completely missed the point of the video. Completely. Let's see. So let's go back to this risk scenario here. So you have a bond portfolio that can get you a 4% yield every year. And let's say that your risk profile on that is a 2 out of 10. Okay, so then you have a stock portfolio that can maybe give you 10. That's your expected return, but your risk is like 8. What would you go with? Maybe the actual total return of the stock market is going to be negative 15. That's where that risk premium comes in. You're going to see a lot of money flow in and out. And again, it's going to get interesting because, I mean, all this money has to go somewhere. If you talk to high net worth individuals, they're like, one, they either don't care. That's literally what it's titled. Exactly. You didn't watch, though, buddy. So they either don't care or they're like, where the fuck are we going to put all this money? That wouldn't even be an inflation right now. True. Eventually it might. Risk adjusted, it would. Well, no, it would beat the equity market. It wouldn't beat inflation. But even tips are like treasury inflation protected securities. Those are going to get hammered. It's like, where are you going to put this money? Is the question right now. That's why when you got that one piece of data that came out and everybody was screaming pivot, you saw everybody getting excited and trying to force their will on the Fed because they have so much cash on the sidelines and they're like, where the fuck are we going to put this? Your portfolio is beating inflation. I bet the vast majority of you guys with us in the group are slaughtering inflation. Like just killing it. So going into tomorrow, it's going to get spicy. It's going to get spicy. You're going to see some crazy shit, I think. What about Oxy? You're about to go Buffett? You could. The oil trade is going to take the oil trade is going to take some time to play out. Just because there's so much craziness with it. You're going to see a lot of not like the US has to almost respond to what OPEC's done and what they're going to continue to do. So let's see here. Let's do a little bit of a quick wrap up. Then we're going to wrap things up for tonight, guys. We're going to get a couple of tickers going, key levels to look out for. Remember, guys, if you haven't already, make sure you guys hit that like button on the stream. And again, if you want to come to all those live streams that we do every day, get access to the proprietary algorithms, all the streams, everything like that. Here's that link right there. Hop in there with us, man. But let's see. I mean, really what you're looking out for is bank earnings tomorrow. That's really it. Pay attention to the bank earnings. Retail sales data, consumer sentiment, and then we'll see what happens with England. If England comes out and you see anything on the news feed that says tax increases, the market's probably going to go up. And if you see anything else related to the pension funds and how the UK is going to manage the stopping of bond purchases, that's going to be incredibly important for tomorrow. So yeah. That is going to wrap it up for tonight, team. Make sure you guys hit that like button on the way out. Hop in there with us with 1348 if you're ready. If you want to take your trading seriously, you guys know where the best place to come and learn how to trade is. So it's in the top of the live chat over there, pinned. It's in the live chat here too, floating around. Hop in there with us. I will see you guys later, and peace.